afternoon, good evening, traders and investors, and welcome back to the Trading Analysis YouTube channel. Bennett Tyndall here on Tuesday afternoon, July 26th, 2022, and I wanted to take just a minute of your time to bring you up to speed on the latest developments in precious metals. Specifically, we're taking a look at price action in gold futures. And you might be thinking, after the 2078 high that we had in March and now a 20% correction that's followed, why on earth would we be interested in a potential long trade in gold? And to answer that question, I first want to take you to the chart overlay. And by the way, I'll hit the pause button here for any of you who are new to the channel. Perhaps you have landed here following our email from today. Welcome. We appreciate you all taking time to check out our YouTube channel and our public content. Taking a look at the overlay where we can see the dollar index alongside price action in gold futures. This takes us back to the 2078 high that gold established in March of this year. Following the 2078 high, we saw consolidation out of the dollar and gold, at which point we started a significant upside breakout in the dollar, which started to take us above key technical resistance. And as a result, we see gold moving impulsively lower. Now, you might be thinking, with such a significant breakout for the dollar and with such a significant breakdown from the 2078 high, why on earth would we be interested in even considering a bullish trade in precious metals? And to answer that question, I will now take you to the weekly time frame, looking at price action in gold. And we are going all the way back to the 2015 low, at which point a trend establishing 5-wave rally took us to the July 15th, 2016 high. We then see a 3-wave consolidation lower into August of 2018, at which point an upside impulse resumes. The upside impulse, as we reviewed last week, did meet resistance at our base trend channel. This takes into consideration the low from 2015 and the low from 2018 with our parallel trend line over the 2016 high. That is exactly where we met resistance in gold, going back to August of 2019. We consolidate, and then we see a significant break higher into August of 20. From August of 20, we see another consolidation effort into March of 21. We then see another 3-wave trend back to the upside. And many were expecting the 2078 high to break and yield continuation above the high from August of 20. We unfortunately failed. We met resistance, and we started to proceed lower. In fact, if you take a look at the chart that was included in the email, after the decline from the 2078 high and after the consolidation into April, we actually expressed our sentiment with our clients and opted to short gold on April 19th for what was expected to be further consolidation and a further move to the downside. But now, as we see gold meeting downside support or nearing a test of downside support, we have to ask ourselves the question as to whether or not we have a satisfied, a completed, overall counter-trend corrective move, and can we justify an impulsive break higher back to 2000 and beyond? And I think the answer to that question is absolutely yes. What we're looking at here is a 5-wave trend establishing move. And in the world of Elliott Wave, as we discussed last week, we have 2 classifications of price developments. We have trend establishing motive waves, and we have counter-trend corrective waves. Simply put, motive waves move in the direction of the higher degree trend. Corrective waves move opposite the direction of the higher degree trend. So allow me to show you an example. Here is a 5-wave trend establishing move into 2016, and the counter trend correction is moving against the upside trend from the bottom left to the upper right hand corner of your screen. Inside of corrective waves, however, we also see motive waves or trend establishing waves. In this case, let's imagine a 5-wave decline in wave blue A. This 5-wave trend establishing move is moving in the direction of the higher degree trend, because in this case, the higher degree trend is the ABC pullback. So essentially, we have up in 1, back in 2, up in wave 3. The wave 3 objective included 1821, 2023, and if we broke that, we could potentially have seen a move up to 2400. We ended up stopping at about a 200% relationship to the wave orange 1, and we have then seen from August of 20, 3 waves down, 3 waves up, and now 5 waves down. As you can see, we are back testing the upper boundary of the base trend channel, and as we test the upper boundary of the base trend channel, we are simultaneously meeting support offered from multiple degrees of trend. We have a confluence of fib objectives offered from technically 1, 2, 3, 4 degrees of trend if we really dive inside of the blue sea wave, which I'll take you down and we can take a look at here in just a minute. Before we take a look at the decomposition of the blue sea wave, I first want you to note the levels of interest. And those levels of interest include 1672.6, which is a 38.2% Fibonacci retracement of the orange third wave break higher. And in addition to that, we also have a quality to the August 20 through Feb 21 decline, meaning if you were to measure the magnitude of that decline and project it from your B wave high, this particular downturn being equal to the move from August of 20 through Feb of 21 comes in at 1659.5. I'll now take you even lower in the time frame scale, and we can take a look at what's actually been happening here inside of the subwaves, and allow me just a minute to get this chart set up. Taking you over to a view of gold futures and looking at the subwave, I want you to notice what we've seen thus far. Now looking at the subwaves, and allow me to take you back to the higher degree wave count, what we are tracking and decomposing is the decline from the 2078 high down into support. And I want you to also pay attention to this trend line here that we have. This particular trend line in my other chart is actually green. I do apologize for that discrepancy and confusion. But I want you to notice this upper boundary of that particular base trend channel is more or less the area of resistance that we are watching to yield another turn lower in gold. So we're looking at the 1, 2, 3, 4, 5 wave decline that we expect to see occupy the blue wave C position. There you can see the 1, 2, 3, 4, 5 labels. So taking you back to the subdivision, here we can see the down in 1, back into, here's where we shorted and expressed our bearish sentiment. And now, as mentioned with the 4 degrees of trend offering a confluence of support, we need to look deep inside of the final turn lower, and this final turn lower actually represents the overall move in green 5 of blue C of orange wave number 4. Looking at green 5 of blue C of orange wave 4, and allow me to increase the size of that fourth wave, we can see from the high on June 10th, down in 1, up in 2, smaller 1, 2, smaller 1, 2, 3, 4, 3, 4. We had a downside objective of 1678 with our clients. That is where we expected price action in gold to meet support for a rally back. And we're now looking at resistance between 1744 and 1749. If this zone starts to turn lower, then we should expect another test of downside support near 1660 to 1672. And alternatively, if we break through resistance above the previous fourth wave at 1749 and above the 1744, that's when we might actually have to consider moving all of this over, which then anchors C of wave 4. And we talked about this last week. So that's what we're expecting. That's what we're watching in the short term. Looking at the price chart of the US dollar index, allow me to get that set up for you. Looking at a chart of the dollar index, and allow me to pop back over there. Here in the chart of the dollar index, while we are seeing gold and precious metals in general meet downside support, silver included, we are simultaneously seeing price action in the dollar meet upside resistance. Now, as I mentioned in the email, please don't take this analysis the wrong way, because we are well aware of our upside targets near 112 in the dollar, which could still come to fruition. If in fact we see those levels met and we see upside continuation above the 786 retracement, then perhaps back over to price action in gold, what we're seeing is actually a complex correction. And I'll show you the difference between the flat and the complex correction now. Looking at our blue count has our orange fourth wave. This is the same fourth wave decomposed as an overall complex correction, meaning 3 down, 3 up, and then another 3 waves to the downside. So this particular chart would suggest that we would go back only in 3 waves, then move down to support, and then reverse. And this remains a possibility if, in fact, we see the dollar break significantly above the 786 retracement. But we do see both of these particular cycles, these 5-wave trend establishing developments, nearing the completion, and that should offer a bullish pivot for precious metals. So looking at price action here in the dollar, back to 2008, up in 1, A, B, C, and 2, 5 smaller waves of 3, down in 4. We looked at the subdivision of Green Wave 5 last week, and Green Wave 5 could see consolidation and continuation up to 112, but it has an equal chance of failing at the current 786 retracement, which, by the way, the 786 retracement is the decline from the 2001 high in the dollar. So that's what we have our eyes on here for precious metals over at tradinganalysis.com. We do see a cycle, an impulsive, a trend establishing cycle in the dollar nearing completion, while simultaneously we are seeing the overall pullback in gold nearing its downside support, which should offer a bullish pivot back on the long side. Thanks again for tuning in. I hope you enjoyed the content. Please check us out anytime, tradinganalysis.com. And we would also encourage you to tune in every Wednesday morning, 8:45 Eastern, for our TA Live Wednesday live stream show. Have a fantastic afternoon, fantastic evening, possibly even a good morning. Hope you guys are doing well, and I'll see you back on the next update. Take care.